Let's get Greg Anderson in here right now from CitiFX. We're thrilled he could run over here from his trading desk. How could you leave your trading desk on a day like this? Are you in the Bob DiClemente timeout chair?
You know what? It's such a nice day outside. It was a good excuse to get out and take a cab ride over.
Major currencies. Let's go see here. He just wants to get lunch at the Bloomberg food court. Okay, $1.4575. Let's go to yen first. 81.81. When do they intervene again? A lower number is a stronger yen. They don't want that. Are we on intervention watch, or does that wait?
I think we're on watch, but the issue is that the yen is just moving in line with other currencies. But we were sort of on watch at 83, the figure, and then 82, the figure. And
right.
I would imagine that ahead of 80, they will probably intervene unless euro dollar is through 150, et cetera, and then maybe not.
My problem here is everybody reacts to the gorilla in the room, which is the U.S. dollar, weak U.S. dollar, higher commodity prices. Who is blinking? When you and Steve Englander look at this, which currency, which nation is going to say enough of this dollar irresponsibility and they start jawboning this? Is it going to be the French? Is it the Germans? What's your guess?
Well, you know, the Canadians sort of already have over the last few weeks. And that was pretty clear in the NPR. And other countries like Australia has been, you know, out front saying, hey, we're not bothered by a strong currency. I would imagine that we might hear a little bit of noise out of Europe at 150.
Let's get over here, guys. Good camera work here. We're just making this up. We're making this up with Greg Anderson. And here it is, the Canadian dollar, U.S. strength. And this is the anti-Trudeau. This is this long Canadian dollar, hello Alberta oil strength. And look at this plunge down. So much of what you do is not the level, it's the rate of change. Is the Canadian dollar plummeting to new strength right now?
It is, maybe not as hard as it fell in 2008, but it feels like a very similar dynamic.
Yeah, right there. You can say more. It's TV. We don't have to go to traffic and weather. You can say more, Greg. What's the Canadian government going to do about that?
Well, you know, the only thing they really can do is not raise rates and intervene verbally. I think they're committed not to intervene with cash.
When you look at the dollar, let's bring up synthetic euro here on this chart if we could. We made this up at the last moment. Well, we really appreciate Greg coming over here on a lovely Thursday afternoon. 20-year-old synthetic euro. Thank you, Casey, for that. Major Casey shout out. Okay, 160 is up there at the top roughly, and we've been churning in the upper right corner. Where's the point of pain for developed Europe? We're already there for Greece, I assume, but where does France or Germany say enough? Is it 148? Is it 150? Or do we really need to go to 158 to get that pain in?
Well, you know, it depends on what's happening with dollar China, I think, because that is the growth export market for Europe. And if China were to appreciate by 5% and Europe appreciated by 5%, I don't think there's any pain felt.
Will China do that? Will they appreciate by 5%, or do we tell them to do that? How does that process work? You've got the inside story in Beijing.
I think we've been telling them for years and years, and
they have been listening.
They will move at their own pace.
Okay, let's see how they've been moved. If you guys could bring the camera over here. Here is that fixed renminbi. Here's the first appreciation of the yuan. Here's the managed curve down. Here's another fixed period. And is this just going to repeat itself? I mean, it looks sort of pretty. It's an elegant chart. Is it just going to go flat again and then they curve it down again?
I think that's the most probable thing, that you have just kind of a managed appreciation of about a 5% per annum clip. However, there's a lot of talk in the market today about potential for a one-off reval. And that may have been
this one right here.
Yes. May have been a little bit of what was behind the move in all the other major currencies overnight.
Yeah, right there's that first one-off reval. That was a very historic moment in foreign exchange history. What's a weak dollar mean for my viewers in the United States?
At some point, it brings inflation, but it also probably means a rebirth of manufacturing in the United States. So it's got positives and negatives.
Earlier this morning on Bloomberg Surveillance, folks, I talked to Richard Franulovich at Westpac. Let's listen in about the outlook for the United States dollar.
The dollar is paralysed, absolutely paralysed by the low rate structure here, whereas the rest of the world is hiking rates. And then, of course, you have the news from S&P, the credit warning downgrade for the US, which hasn't really hurt bonds too much, nor equities, but I think globally the dollar has been punished for that. So, yes, the dollar is looking a bit extended and oversold, but there's a good reason for that at the moment.
Extended is Franulovich talk for overshoot. Rudy Dornbush came up with that idea, the pendulum swinging and overshooting. Do you get any sense within trading activity that the dollar is overshooting weak right now?
You know, what causes to overshoot is when speculators get ahead of the core flows.
Right.
And from what we saw early this week, speculators were afraid they were ahead of the core flows, and they cut back. And then those flows have come in and filled in very aggressively over the last couple of days.
What does that mean? I don't have a clue, that jargon you just said.
So the dollar weakened steadily because we have a deficit of flows coming into this country relative to what goes out in our trade deficit. And speculators try to anticipate that, and they're constantly shorting the dollar. And from what we saw, they actually reduced their dollar shorts this week. Which means that we're not really in an overshoot.
We're not overextended, and we're not in an overshoot.
Yeah, not yet.
Just amazing. Is it more about real interest rates in anticipation of Fed policy or ECB policy, or is it about those capital flows? How do you balance those on a Thursday afternoon?
It's both, and the capital flows are dependent on expected future interest rates. Honestly, on a Thursday afternoon before a holiday, typically the market balances that by squaring up, and that's what makes this move this week all the more remarkable.
I want to look at Brazilian real, your expertise in Latin America. I believe they raised rates, or central bank raised rates, a defensive strategy there. Are we going to see a lot of this defensive strategy against inflation by emerging market, buoyant economies raising rates?
Yes, raising rates and begrudgingly allowing the currency to appreciate. Which is the way to reduce the impact of commodity prices.
Greatly appreciate you coming over. Greg Anderson, thank you so much.